Hello, everyone. My name is Jerry. I'm with American Home Loans here in Concord. American Home Loans AHL here in Concord. My number is 925-586-7023. My my website for mobile home financing is mobile MOBILE home HOME loans.com. This is the actual website that you would log into in order to complete a mortgage loan application. Anyway, the reason for this video today is to talk about how to apply for a mobile home loan and what are some of the requirements. I get a lot of calls regarding mobile home loans from buyers that are wishing to apply and have a lot of questions regarding mobile home financing. So we're going to cover a couple of things today. I want to go over three topics today regarding mobile home financing so you can share this video with your buyers so that hopefully they have a better understanding of what it takes to apply for a mobile home loan. Okay, so first of all, step number one is the buyer is going to call me. We're going to go over a loan scenario with the buyer. I'll go over the information in terms of what purchase price he's looking at and what income is and whatnot to try to figure out where the buyer needs to be. So I will do that. Just give them my information and I'll cover those topics with them. Second thing is if I feel that they're good candidates and I feel that they are going to qualify, is we're going to have them complete a mortgage loan application. Okay, two ways we're going to do the mortgage loan application. I'm either going to take the loan application over the phone with them, or I'm going to email them my mortgage loan application link so that they can complete it um, on their own. Okay, once they complete the mortgage loan application, I'll get it back. I'll review it with the borrowers, and after I review it with them, if I feel that it's all good, I'm going to submit it to the bank. Once I submit it to the bank, normally within 1 to 2 business days, hopefully I can have a conditional approval, a counter, or a denial. If we have a denial, we'll go back to the application and we'll see what we can do to try to clean it up and try to get it approved. The third thing is the buyer or the borrower has to make sure that after they get a conditional approval from me, they go to the park. You, the buyer, have to go to the park and you have to get approved with the park. Okay, you can get approved with me for the loan, but if the park does not approve you, that means that this application is going to be a no-go. So you have to get approved with the park. They have their own rules and whatnot to the park. Okay, a couple of other side notes that buyers always ask about is how is my payment? What is my payment comprised of monthly? Okay, the monthly payment on a mobile home loan is pretty much comprised is broken down the same way as a regular home loan for the most part. Um, so you're always going to have number one, you're always going to have your principal and interest. So when you get your monthly statement, you're going to see your principal and interest. Okay. Our loans are fixed. So our rates are going to be fixed. Second thing you're going to have your home insurance. We're going to do an impound account. So anytime as you're making your payments gradually, your home insurance is going to be included in that payment. Third thing is property taxes. In most cases, 99% of the time, you do not own the land. You do not own the land. You typically only own the manufactured home. Okay. But in some counties, well, actually, let me take it a step back. You're always going to be paying a monthly amount for taxes that's used to pay off your yearly registration on your manufactured home. There are some counties that they do have property taxes on these manufactured homes, and you're actually on the tax roll. If you're on the tax roll, then you're going to have taxes. Although I've never seen taxes for a manufactured home higher than $100 a month. But normally I'll go in and I'll figure out that part out. I'll go in there and figure out if you have property taxes and whatnot and how much they are and how we're going to break it down into your monthly payment. Okay. For the most part, 99% of the times I see property taxes as low as $20 per month. The highest I've seen them is like $100 a month. I'll find that part out. Um, Fourth thing is your monthly space rent. The monthly space rent is also going to be broken down into your payment. Okay, so those are the four components on how your monthly mortgage payment is going to be broken down to on your mobile home loan. Okay, these three items on top are going to be in. These three items on top are going to be in your one mortgage payment: principal and interest, home insurance, property taxes. The monthly space rent you'll pay directly to the park. Okay, a couple of other side notes that I want to talk about. there are no investor loans on mobile home on manufactured homes. Okay, when you're applying for a manufactured home, you're applying as an owner occupied owner occupied owner, or you're purchasing as a second home. Okay, there are no investment loans that manufactured home investors will offer on these products. Okay, other side note, any borrower that is on the loan application is assumed is assumed that that person will be occupying the property as well. Okay, so if you have two borrowers on the application, the assumption is that both borrowers will be occupying the property. On a side note, we do get loan applications sometimes, and applicant number one could be a strong buyer, applicant number two maybe not as strong, and he's not able to qualify as applicant number two because of the low credit scores or DTI ratios or whatnot. So many times the borrower will go out and get a family member or get somebody else to go on the loan with them. Perfectly fine. Keep in mind that whoever the co-borrower is going to be, is that co-borrower will also be assume that he's also going to be occupying the property, because there are no investment loans. So whoever's on the loan will also have to get park approval as well with those two individuals, whoever's going to be on the loan application. Okay, because we're going to assume that they are both occupying the property. One important thing you're going to realize about mobile home loans is the year built. We talk a lot about pre-HUD homes. Okay, pre-HUD. Pre-HUD is basically anything built before June of 1976. June of 1976 and older. If you're buying a manufactured home and it is built before June of 1976, that's considered a pre-HUD. Pre-HUD is basically manufactured homes that were built when there weren't building codes on these units. After this year, they implemented building codes on manufactured homes. Okay, going back to pre-HUDs, anything built June 1976 and older, just know that interest rates on these units are typically anywhere between 1 to 2% higher than your regular manufactured home that is newer than this year. Okay, so any pre-HUDs, you're going to find that are going to be at least 1% to 2% higher on the rate if you decide to buy one of these older units. A lot of times they are priced more attractively, and a lot of times they're priced more attractively because they know that the consumer is also paying a higher rate for those. Okay, so very important to know, very important information. Other thing to know, the loans. These loans have fixed rates. There's no adjustable rates on manufactured home loans. The products that we offer, they are fixed. I have on here between 20 to 25 years, but no, I've seen manufactured home loans anywhere between 16 to 25 years. So, but they are fixed, always fixed. The thing to know is that's going to be determined. The years are going to be determined once we actually take the loan application, and once you actually get approved, we'll be able to determine the number of years. But just know that it will not be anything for more than 25 years. Okay. And it could be as low as, I've seen them as low as 16 years. So that could so it all depends on the strength of your application once we submit it. Here are some important notes. Some important notes to know about the financing part of it. Okay. Number one, 680 or higher credit score. Buyers with a 680 credit score or higher are going to get better rates, and they're going to get better costs. Typically, a buyer with a 680 credit score or higher are the ones that I typically see that can get in with 5% down plus the closing costs. Okay. The minimum down payment for our mortgage manufactured home loans are always going to be 5%, nothing less. There's nothing less than 5%. Every buyer that qualifies, and assuming that they qualify with a 680 credit score and good DTI ratios, the minimum is going to be 5% down. No one will get in with 3%. There's no 4% down. There's no 2%. There's no money down products that we have. Every borrower will get in with a minimum of at least 5% down plus closing cost. Okay. Um, Closing cost varies in every county. Closing cost in many instances I could see as I see closing costs as low as 3,500. I see closing costs as high as 6,000. A lot of it depends on the county that the manufactured home is in, and a lot of it will also depend on what the costs are associated with the title company. So that's something you choose with your realtor. Okay. Um, the buyer always needs to come in with 5% down if that's what he qualifies for. The seller can the seller can credit the buyer all the closing costs if you can negotiate that with the seller. Okay, if you get $5,000 towards closing costs, fine. We'll use everything we can towards closing costs. Okay, let's assume you get 5,000 credit towards closing costs, but let's assume closing costs only comes out to be 4,000. Okay, so that means there's another $1,000 there. If you don't use up that extra $1,000, most likely that $1,000 is going to go back to the seller. It won't go back to the buyer, even though you got $5,000 credit towards closing costs from the seller. You cannot anything that doesn't get used, it goes back to the seller. You cannot use that 1,000 towards your 5% down neither. You cannot use that extra 1,000 towards a principal reduction of 1,000. Forgive me. So anything that you get for closing costs, you got to use it up. If you don't use it up, it's going to go back to the seller. Okay. I think I covered a lot of important points today. Just want to remind you, if you decide to, if you decide that you do want to apply for a manufactured home, just make sure you contact me. Here goes my information. You have my website information as well, where you can also go online and apply. All right. Thank you guys so much for the time that you've given me to explain manufactured home lending. Just know that manufactured homes, the sale of manufactured home has been on a rise for the last several years, and I see there's a huge market and a huge request for mobile home financing and mobile home products. Thank you guys.